Yeah, so we look at tax, introduction to taxation. Now, we need to discuss what we mean by tax before we even talk about taxation. Do you get? You know,
Yeah.
we are in a mixed economy system. What do I mean by a mixed economy system? Is an economy system whereby both the private and individual, both the private and the government, they play a role in driving out the economic activities. Now, for government to discharge their function, do you get, they need some resources in order to carry out their administrative functions. And one of the way they get their resources in order to carry out this administrative function is through the imposition of taxes. So what do we mean by taxes? We said tax is a compulsory payment paid by citizen and non-citizen of a country to the government based on their income, properties, rules, etc. Now, when we're talking about tax, it is a compulsory payment. Either you like it or not, you are going to pay tax. And this tax we are talking in question is not only paid by citizens of a country. No, it is paid by both citizen and non-citizen. Because what qualify you to pay tax is not based on citizen. There's something we call residence. Residence is different from citizen. Do you get? You can be a
Yes.
resident of a country, but not be a citizen of a country. So you don't not being a citizen of a country does not mean that you are not eligible to pay tax. So that is why in this definition we are saying tax is a compulsory payment paid by citizen and non-citizen of a particular country to the government of that country based on your income, your property, or goods. So what we are trying to say in essence is that taxes can be levied on your income. For instance, your salary, your profits, or it can be levied on your property. Maybe when you dispose your property and you have a gain, that's a capital gain, a tax is being imposed on it, or on the consumption of goods and services. So that is what we mean by tax. So the unique thing we have to embed in this definition is that tax is a compulsory payment. One, it is paid by citizen and non-citizen of a particular
Not.
country. Two, and it is based on your income, property, goods, or services. Now, what do we now call taxation? Now, taxation is the heart, like the process of you imposing tax on the income, property, or goods of individual, partnership, trustee, companies of a country. So the process or the act of imposing that tax is what we call taxation. Why that tax itself is a compulsory payment that is made by citizen or non-citizen of a particular country to the government of that country based on their income, property, goods, etc. Now we move to the attributes of taxation. Before we say a payment is a tax, it must have some attributes. And what are the attributes of a tax? One of the attributes of a tax is that tax is a compulsory levy. Whether you like it or not, you are going to pay tax. That is why if you are supposed to pay tax and you didn't pay tax, there is a penalty applicable to it, attached to it. So that means that by nature of tax, you have to pay it. It is a compulsory levy. And we said the tax is collected by the government or its agents. We are paying our tax to the government or through their agents, like the Federal Inland Revenue Service and the State Board Internal Revenue Service. Now, we now say tax is not imposed as a legal penalty for any offense. Now, what this aspect is trying to tell us is that tax is not imposed as a result of any offense you've committed. That is why there is a difference between tax and, let me say, levy or penalty. So you as a taxpayer, you are not paying tax as a result of maybe you've committed an offense before. No, tax is not paid as a result of as a penalty for any offenses you've committed. And we said it is imposed on what? On citizen and non-citizen, be it individual or companies. So in the face of the tax law, there are taxation for individuals. When we talk about individuals, we talk about sole proprietorship, we talk about partnership, we talk about trustee. And when we talk about companies, we are talking about a listed company, a limited liability company, or a public limited company. So we said the tax is imposed on citizen or non-citizen. I've said that earlier. So the tax is based on the principle of residency. It's not maybe I'm not a citizen of this country, or I reside in that country. Because I'm not a citizen of the country, I'm not going to pay tax. That is not what we are saying. It is based on citizen, or whether you are a citizen or you are not a citizen of that particular country, you are to pay tax, and that is applicable to individual or companies. And we say tax is backed by law, because for every form of taxation we have, they are always backed by law or acts, where we have the Personal Income Tax Act, the Company Income Tax Act, the Value Added Tax Act, Petroleum Profit Tax Act, and so on and so forth. That is attributes of taxation. So for a tax system to be called a tax system, they must what? Exhibit these attributes. So yes. So we look at objective of tax. Now, what are the objective of tax? Government cannot just impose tax without an objective, without a reason for doing that. One of the primary objective of imposing tax is to generate revenue. I think you can agree with that.
Yes, sir.
Yeah. So one of their primary objective is to generate revenue in order to finance the administrative function of the government. We also said one of the objectives is the redistribution of income and wealth. Redistribution of income and wealth. What does this redistribution of income and wealth mean? That means we are collecting from the rich in order to take care of the poor. So that is why they will impose higher tax on the rich people, like on those who earn more income, in order to cater for the needs of the poor. So it's just as if you are collecting more from the rich and cater for the poor. That is what we mean by the redistribution of what? Income and wealth. We also have what? General administration purposes. General administration purposes. Now, through the money generated from tax, governments can be able to use those money to manage or to cater for the administrative needs of the what? Of the economy. For instance, providing electricity, basic social amenities, education, and stuff like that. That is another objective of imposing tax. We also have management of the economy. Management of the economy. So government also use this tax to manage the economy in form of maybe controlling inflation and some other managerial functions. We also have the control of importation of harmful goods. Now, how does this happen to control importation of harmful goods? In that case, government can use tax to control importing harmful goods, whereby they will impose more tax on the harmful goods that want to be imported into the country. For instance, let's talk about cigarettes. Cigarettes is harmful. Now, when they are importing cigarettes into the country, they are going to pay more, they are going to impose more tax on it, because the aftermath of that is that it's going to increase the price at which that harmful goods will be sold in the country, and it will discourage people from buying. That is a tactics. And they also use taxes to what? To protect infant industries. What do you mean by infant industry? Industry that are just what? That are just coming up. Industries that are just what? That are just coming up. The government can decide to give them tax incentives, or reduce the amount they pay as tax, or they should increase importation of some goods that are being produced by the infant industry in our home country. Do you get that part?
Yes.
Yeah. So those are the objective of taxation. And also we talk about the economic effects of taxation. Economic effects of tax. What are the effects of tax? Number one is that it increases prices of goods. Yes, when you impose tax on a particular commodity, right? The aftermath is that it's going to increase the price at which the supplier is going to sell the goods to the consumer. So the higher the tax, the higher the prices of those goods. And it reduces production. It reduces production. Now, let's say, for instance, in a manufacturing environment, the material they obtain to produce goods, when they pay higher tax on it, right? When they pay higher tax on it, the company might be forced to reduce the quantity of the material they are buying. And the effect of that is that it's going to reduce their production. It's going to reduce their production. We also have, it reduces the income of workers. That is very clear. That's why we have gross salary, net salary. Your net salary can never be higher than your gross salary. Do you get? Had it been there is no
Yes.
tax, then you have your gross,
Something like
there won't be something like net
that.
salary. So if you are earning
Yeah.
400K and you are paying tax of, let's say, 50,000 naira, it has reduced your income, because you, at the end of the day, you'll be going home with what? 350,000 naira. You also say it discourage savings. Yeah, it discourage savings. Now, if your take home has been reduced, what you'll be planning to save will also be reduced. And in fact, if your consumption need is higher, then you might not be even be willing to save at all. Also, it discourage investments because the imposition of tax is driving out money from you. And once money is being driven out from you, then it will discourage you from saving. Even though you still want to save, you are saving less, you are investing less. That is the economic effect of taxation. It increases the price of goods, it reduces your take-home income, it reduces production, it discourages savings and investments. We also talk about the problem that is associated with collecting of tax. Yes, the problem that is associated with collecting of tax. Now, one of the problem is false declaration of income by taxpayer. So here we are just talking about the problem we faced in our Nigerian tax system. Yeah, the false declaration of tax of income by taxpayer. That is a major problem because taxpayer now, in a bid for them to pay lower amount of tax, they won't declare all their source of income. They won't declare all the source of their income. Even though if they declare the source of their income, they will understate it. They are doing that in order to pay less tax. And when they are paying less tax, it's going to reduce the amount of revenue that is being accrued to the government. And by so doing, the government will not be able to achieve their objective. That is one of the problem when you are declaring false income. And it is an offense. It is an offense. Improper books of accounts. Improper books of accounts. Improper books of accounts. I believe you know our books of accounts, the principal books and the subsidiary books, those supporting documents. Do you get? When proper books
Yeah.
of accounts are not kept, when proper books of accounts are not kept, then we cannot really say the actual revenue you are making. We cannot really say the actual expenses you are making. So we cannot even conclude whether the income you are declaring is what you really earn as an income, whether the expenses you are declaring, whether you have overstated your expenses. You know, when you overstate your expenses, you are reducing your tax liability. I think you know that. So when there is no proper books of accounts, there won't be adequate record. So there cannot be any justification for any income or expenses you are declaring to the government. In that case, it is a problem. We also have cost of collection. When the cost of collecting tax is higher than the revenue from taxation, it is a problem. It is a problem. Or even though if the cost of collection is not high, but the effect of the cost of collection will be the one that will render the net revenue to be insignificant. Okay, look for instance, maybe you are using 50% of the tax revenue to collect as a cost of collection. That is not an ideal tax system. That is not an ideal tax system. We also have insincerity of taxpayer. Some taxpayer, they are not sincere. They are not sincere. They are not sincere. Do you get? They are not sincere in the sense that
Yeah.
they won't tell the tax officials or the tax authority all their sources of income. No, They won't tell the tax authority all their sources of income. They lie. So they are doing all of this in order to what? In order to reduce the amount they want to pay as tax. We also have tax evasion. We have tax evasion. Tax evasion is a criminal offense, right? It's a criminal offense. That is when you are trying to achieve tax minimization through illegal means. That's what we call tax evasion through illegal means. When you falsify income, when you understate your income, when you overstate your expenses, right? They are tax evasion practices and they are criminal offense. They are criminal offense. And there are a lot of strategies, there are a lot of tactics in which companies, even individuals, they use to evade tax. Yes, they use to evade tax. We also have low level of voluntary compliance. When we talk about voluntary compliance, that is, you willingly want to comply to tax. When you willingly want to comply to tax, there's no how you will declare false income. You will have proper books of account, right? Then you will be sincere. In fact, you won't engage in form of tax evasion practices. But when there is low level of compliance that I don't want to, right? Now there is a low level, you don't want to willingly comply, is also a problem. So if you don't want to willingly comply, that's when tax authority will be chasing you up and down, come and file, come and pay, remit, do this, do that. And if you are doing that, it is a problem in our tax system. So those are the problems associated with collecting taxes, or let me say problem.
Collection.
Yes, we can say problem associated with Nigerian tax system. Yeah. So for every problem, there are solutions. So that's why we have to look at factors that enhance the efficiency of tax administration. So what are the factors that will bring efficiency in administering taxes in our country? Or let me say, one of this thing is high level of voluntary compliance. So if you look at all those factors, it's just as if you want to flip the problems.
Opposite.
Do you get? Now, yeah, we talk about
Opposite
low
of it.
level of
Yeah.
compliance is a problem. High level of compliance will be a
It's a
factor that will
solution.
enhance. So that means what we are trying to say here is that the tax officials, the tax authority, they can engage in some educative programs, events, webinars that is going to bring, or that is going to
The
boost morale
interest
towards
of people in paying
complying
tax.
to tax. What do you say?
I said I can boost the interest of people in paying tax.
In paying tax. Thank you. In paying tax. So we also have adequate accounting record. When there is adequate accounting record, you have a computerized system. Even though you are making of Excel to keep your record, they are well organized. They can be make reference to. All those things, they are factors that will enhance tax administration, because when the time they want to do tax audit, it will information will be readily available. In fact, if they want to access any record, they can easily access record without challenges. Why? Because there is adequate accounting record. For every income you declared on your financial statement, it can be traced down to the source document, the supporting document, the invoices. It can be traced down to it. For every expenses that you declared in your financial statement, that you remitted to the tax office, there are supporting documents, there are receipts, invoices that are attached to it. There is a complete ledger there is a complete ledger for all the items on your financial statements. There is a ledger for them. You keep your subsidiary books of accounts intact. Everything is well documented. When all those things are in place, it's going to enhance the administration of tax. We also have competent and honest staff. Yes, this competent and honest staff, I can flip it in both sides, in the aspect of tax authority and in the aspect of tax officials, right? In the aspect of tax officials, there are some tax officials, sorry to say, that are not competent enough. In fact, some of them, they are not honest. Do you get? After you've given them your financials, your audited report, they can see it. In fact, there is supporting documents that will still come and tell you that that is not what you are supposed to pay as tax. And they know that that is what you are supposed to pay, but they'll still come and tell you that is not what you are supposed to pay as tax. Okay, anywhere you, maybe there is a place you said you want a relief, a tax credit, a maybe capital allowance to deduct from your accessible profit. They will come and tell you this is not allowable. This is when you'll be arguing over allowable deduction, non-allowable deduction. And to them, they know that you are doing the right thing, but because they are not honest. So if all those things are in place, then the tax system will not be efficient. Now let me now flip it, come to the taxpayer. When the taxpayer too, they don't have honest staff. They don't have honest staff. Okay, you know that this income, it is not allowable. You still put it as allowable something. Or maybe you are declaring less income, you are inflating your expenses. Do you get? So all those acts, they don't bring efficiency in the tax administration system. They don't bring efficiency in the tax administration system. So when we are looking about competence and honest staff, we are looking at both sides of the taxpayer and the tax authority. So when you are competent, when you have a competent staff, yes, when you have a competent staff, for every transaction that will occur in an organization, you know the tax implication. You will know the tax implication. You will know that when you charge depreciation on your assets, it is not allowable. It is not allowable. So when they are competent, they will know the tax implication of whatever transaction. They will know the document that they need to provide to the tax authority. They will know that this is what they do. They will know that this is the time they are supposed to remit. This is the time they are supposed to file. Your organization will not be incurring penalties. But when they are not competent, all of this will happen, and is not bringing efficiency in the administration of tax.
I can't hear you.
Can you hear me?
Yes, I can hear you now.
Okay. Let me share my screen back. Can you see my screen?
Yes, I can see it. I can see it.
So we talk about tax simplification. So here it's telling us that the tax system should be simplified, should be easily be understood. When the tax is being simplified, right? When the tax is being simplified, then there will be an efficiency in the administration of tax. So the way at which we arrive at taxable profit, right? Accessible profit Do you get the way at which we compute our capital allowances, the way at which we compute our education tax, the way at which we arrive at tax liabilities, they are made known and simple to taxpayer. When these are
Payers.
made known and simple to taxpayer, it will even instigate their interest, boost their interest towards
In the tax.
voluntary compliance. So the tax system should not be rigid or difficult to comprehend. That is why when there is any changes in tax laws, IFRS always ensure that they release a circular. That circular will bring a simplification, a clear understanding to whatever laws that was implemented, so that you won't what? You won't you won't misinterpret the tax law. Because even though you misinterpret the tax law, it can lead to penalty. That means your company will not be paying penalty. It can lead to penalty. Or it can lead to your company being paying more tax. So that's why a tax system should be simplified. The law should be easily understood. The basis of computation, the documents to file should be clear and made known to the taxpayer. All of this will bring efficiency in the tax system. Now, we also have reinstatement of tax refund mechanism. Yes, reinstatement of tax refund mechanism. So there are some times where the government might need to refund tax to taxpayer. Yeah, they might need to refund tax to taxpayer. Okay, for instance, the withholding tax. Withholding tax is not a form or type of tax. It's just like advance payment of tax. So when a tax has been withheld, right, and has been remitted to the government. So and at the end of the day, you see that your revenue, your turnover falls, your turnover is 25 million or less. And when you are making a turnover of 25 million or less, right? You are
Sorry, I see the way
exempted,
you're sweating. Oh,
you
man,
are,
catch me.
you are exempted from tax. Oh, it's not close to me. I'll get it.
Sorry.
You are exempted from tax. You are exempted from tax. Now, the withholding tax that has been withheld, the tax authority should refund it back to you. So if